Welcome to the last part of the discussion on accounting for joint arrangements. So last time we have dealt with the use of the accounts to identify transactions under joint operations. So for this video, let us start with a discussion on interest in joint operation whose activity constitutes a business. An entity that acquires an interest in a joint operation whose activity constitutes a business shall account for its share as a business combination. So under ito ng accounting for business combination on a separate topic. So anong ibig sabihin nito? When so let us define. A business is an integrated set of activities and assets that is capable of being conducted and managed for the purpose of providing a return in the form of dividends, lower costs, or other economic benefits directly to investors or other owners, members, or participants as defined under PFRS 3, Appendix A. A business combination is accounted for by recognizing goodwill for the excess of the consideration transferred over the fair value of the net identifiable assets acquired. So let us read more as we go along with ano itong tinatawag na business. Interest in joint operation pero business kasi yung kanyang activity. So merong portion on which you should classify it as a business combination and not a joint arrangement. So the accounting as business combination applies when it is the acquisition of initial interest and any additional interest in a joint operation whose activity constitutes a business. A previously held interest is not remeasured if the additional acquisition does not result to control. When an existing business is contributed by one of the parties in the formation of a joint operation. The accounting as business combination does not apply 1. To the formation of a joint operation if all the parties only contributes assets or groups of assets that do not constitute businesses. When the entity and its fellow joint operators are under the common control of an ultimate controlling party before and after the acquisition and that control is not transitory. So this case kasi on joint operations, there are cases na yung kino-contribute natin na operations on the joint arrangement ay business of its own. So anong definition ng business? Yung define natin kanina na integrated set of activities and assets being conducted, managed for the purpose of providing return. Kumbaga, merong separate entity na yung business, tas kino-contribute mo siya. So let us look at the illustration for you to easy understand. So A and B agreed to contribute 1,000 each to jointly operate a balut stand in the upcoming festival. So they agreed for a contribution of 1,000 peso each for a business for an upcoming festival. So kumbaga, this is a short-lived joint arrangement kasi this will only be existing during the duration of the festival. So our analysis here is the joint operation is in its formation stage because nagko-contribute pa lang sila ng assets. And none of the operators contributed a business because they contributed cash. A and B shall account for the respective interests using the regular accounting for joint operations rather than a business combination. So case number 1 is a joint operations arrangement, not a business combination. So bibigyan tayo ng samples for us to analyze kung paano ika-classify yung mga transaction. Pwede kasi na ang SIPALE board exam mo is you identify anong klaseng arrangement ito. Is it a joint venture, joint operations? Is this a business combination, ganun, consolidation, or among others? Case number 2. A owns a balut business while B owns a Penoy business. A and B agreed to combine their businesses to jointly operate a balut and Penoy stand in the upcoming festival. So kung titingnan mo, meron silang separate businesses, A and B. And then, nag-agree sila na i-combine itong dalawang businesses na ito to operate yung balut and Penoy stand. Okay? Our analysis, based on this and based on what we have read, ma-identify mo na parang business combination siya because they contributed an existing business. An existing business is contributed by one of the parties in the formation of a joint operation. So let us take a look. The analysis is existing businesses are contributed in the formation of the joint operation. A and B shall account for the respective shares in the joint operation as business combination. So kung business combination yan, lahat ng natutunan mo kanina, hindi mo yan i-apply. But ang i-apply mo is yung natututunan mo ngayon on your accounting for business combinations. How do you recognize the transactions? So, yun ang demarcation line between the joint arrangements and the business combination. So, here, therefore, makikita mo na mahalagang ma-identify mo kung anong klaseng arrangement ang meron doon sa dalawang businesses kasi kung mali ang yung analysis of the nature of the arrangement, mamamali na ang yung accounting records. Case number 3. A and B are joint operators for of a balut and penny stand. They agreed to admit C as co-owner for an investment of 50,000. So, joint operators na sila ng isang business. Then, meron co-owner na mag-i-invest. Anong klaseng arrangement ito? Analysis. C acquired an interest in an existing joint operation whose activity constitutes a business. C shall account for its share as a business combination. Okay. Bakit ganon? Bakit ganon siya mag-fall? Please take a look at this. Yung item A. Sabi dito, business combination siya if the business combination applies to the acquisition of initial interest. Is this an initial interest? Yes. And any additional interest in a joint operation whose activities constitutes a business. Okay? This is an initial interest and yung joint operation ay it constitutes a business. So, ibig sabihin, kung ganyan, ikaw, being the initial, being the giver of the initial interest, will account for its share as business combination. So, si C, i-account niya yung transaction as a business combination while A and B will account for it under the joint operations. Okay, take a look at illustration 2. A company and B company are joint operators of the joint operations X or JOX whose activity constitutes a business. C company acquires 1/3 interest in JOX for 200,000 and incurs 1,000 costs on the acquisition. The contractual arrangement provides that C company's shares in several assets and liabilities differ from its ownership interest in JO. Shares are set out from its ownership interest in JOX. Okay? C company shares are set out below. So, merong items for PPE, intangible assets. So, may fair value, C company's share, 40% and 75%. May accounts receivable, inventory, retirement benefit obligations, accounts payable, contingent liabilities. Then, merong percentage ng fair values. Tama ba? These are the C company share. Okay. Okay, the accounting is C company acquired an interest in a joint operation whose activity constitutes a business. Therefore, C company shall account for its share in JOX as a business combination. So, di ba yung transaction kanina, if this is an initial interest or an additional interest to a joint operation who constitutes a business, you will account for it yung nag-i-invest or nagbibigay ng interest, initial interest, will account for it as a business combination. So, how do we look at this? The goodwill is computed as follows. The consideration transferred, magkano? 200,000. The fair value of the company's C company's share in the net identifiable assets is 180. So, the goodwill is 20,000. So, paano na-compute yung 180,000? You just have to look at the share of C company on the fair values. Okay? 400,000 times 40%, 20 times 75%, and then i-total natin. Siyempre, lahat ng mga liabilities will be deducted and then you will get 180,000. Saan galing yung 200,000? This is yung consideration na binigay ni C for JOX, acquiring 1/3 of the interest. So how it is financially reported. C company's statement of financial position will include C company shares in JOX, assets and liabilities, and the computed goodwill. So more or less, under this, pinakita na this is a business combination. But more of the discussion of the business combination will be on a separate course. Yung pinag-aaralan mo ngayong accounting for business combination. So ang sinasabi lang dito is, there are cases na joint operations yung business, pero kapag merong uh, co-owner or somebody who invested an initial interest to a joint operation whose activity constitutes a business under item A, yun ay accounted as a business combination at yung A and B will account for it as a joint operation. So yun ang gustong bigyan ng focus dito sa discussion on interest in joint operation whose activity constitutes a business. Kasi baka malito ka. Baka isipin mo, since the business is operating as a joint operations, any investment of interest related to that will be accounted for under the joint operations arrangement. Okay? Now, let's proceed with the joint venture. An entity that first applies PFRS 11 to determine the type of arrangement if it is involved in. If the arrangement is a joint venture, the entity recognizes its interest as an investment and account for it using the equity method under PAS 28. Under the equity method, the investment is initially recognized at cost. Okay? Initial recognition under the equity method, cost. Subsequent measurement, it is adjusted for the investor's share in the investee's changes in the equity, such as profit or loss, OCI, dividends, and results of discontinued operations. Let us look at the illustration for you to analyze. On January 20X1, ABC entered into a joint arrangement classified as a joint venture. ABC acquired its 30% interest in joint venture for 500,000. So, yung consideration. During the year, nag-report ang joint venture Inc. ng 1 million profit, 200,000 OCI. Ibig sabihin, ang total comprehensive income is 1.2 million and then may dividends na 600. The requirements to compute for the carrying amount of the ABC's investment on December 31, yung end of the year. Kasi binuo ang joint arrangement na joint venture noong January 1. Tapos sa ABC bumili and then mga operational transactions nangyari during the year. Tinatanong sa'yo, magkano ang carrying amount ng investment mo at the end of the year. Okay, let us use the T account of the investment in joint venture for us to analyze. The initial investment is 500,000. The share in the profit is, magkano yung profit? 1 million times 30%, 300,000. Share in the other comprehensive income, 200,000 times 30% is 60,000. Dividends, magkano yung dividends? 600,000 times 30%, so 180. 680,000 ang carrying amount at the end of the period ng December 31. The dividends will be deducted because it is construed as a return of capital. The equity method is discussed exhaustively in intermediate accounting. The various illustrations in that book also apply to investment in joint venture. So more of the discussions related to equity method should have been discussed to you under your course intermediate accounting because these methods will not be yung intermediate accounting, pinapresent sa'yo itong mga ganitong klaseng method, fair value method, goodwill method, equity method, because it will be used on your advanced accounting subjects. Do not expect that it will also be taught when it is mentioned. Halimbawa, minention equity method, ituturo pa sa'yo kung paano yung equity method because it should have been discussed under the intermediate accounting. So, if hindi ito nadaanan, it is imperative for you to go over and then analyze kung paano ginagawa yung various methods related to that. So, the answer for this illustration is 680,000. Okay, investments accounted for under the equity method, okay, are presented in the statement of financial position as non-current assets except when they are classified as held for sale. Okay, transactions between a venturer and a joint venture. Gains and losses resulting from upstream and downstream transactions between an investor and a joint venture are recognized in the investor's financial statements only to the extent of unrelated investors' interest in the joint venture. Participant to a joint arrangement with no joint control. A party that participates in but does not have joint control of a joint operation accounts for its interest using the accounting applied by the joint operator. If the party has rights to the assets and obligations for the liabilities of the joint operation. In the absence of such rights and obligations, the party uses other PFRSs applicable to the interest. Okay? Ang sinasabi lang dito, kapag yung isang party is related to a joint arrangement pero wala siyang joint control, paano niya i-account yung transaction niya? Ang sabi, it will account for a joint operation accounts for its interest using the accounting applied by the joint operator if the party rights to the assets. In the absence of such right, the party uses other PFRS applicable to the interest. So kung wala ka namang joint control related to that, you will be using the PFRS applicable to the recognition of the assets and liabilities. A joint venture accounts for its interest using PFRS 9 financial instruments unless it has significant influence over the joint venture in which it shall apply PAS 28. Separate financial statements. In separate financial statements, a joint operator accounts for its interest using the accounting described earlier. Okay? Joint venture accounts for its interest using PAS 27. Okay? Kumbaga ini-specify niya lang dito kung paano yung recognition, but more of our discussion are already comprehensive and exhaustive to the point na by this time you already have identified kung paano ito recognize itong joint operations, joint venture, and joint operations, joint venture as part of the joint arrangements. Kasi itong joint venture, hindi siya masyadong ini-specify or hindi siya masyadong ganun ka-exhaustive yung discussion here because more of the transactions related to joint venture should be discussed in your accounting for business combination. Okay? A party that participates in but does not have joint control of a joint operation or joint venture accounts for its interest using the accounting described above, yung in-specify natin sa taas. So I think the chapter summary, it is for your reading already because this is just a reiteration of what we have identified. I want you to focus on the relevant provisions of the PFRS for SMEs because of the SIPALE being dynamic, they all in various topics they always insert concepts related to SMEs. Kumbaga laging nako-compare itong full PFRS and then yung PFRS for SMEs. So our notable differences will look at this. Yung full PFRS in comparison with the PFRS for SMEs. Okay, let us compare because this will guide you as you identify transactions kasi more or less yung mga concepts related to PFRs for SMEs are conceptual questions in the board exam. Hindi masyadong they are not leaning towards the concept of the computation related to PFRs for SMEs but parang nire-remind ka lang that there is a PFRS for SMEs na dapat somehow ay alam mo kung ano yung differences nila. PFRS 11, under full PFRS, the PFRS 11 uses the term joint arrangement and classifies it into the joint operation and joint venture. Ito yung full PFRS, ito lahat yung discuss natin kanina. However, under the PFRS for SMEs, it uses the term joint venture and then it classifies it into joint control operation, jointly controlled asset, and jointly controlled entity. So nakita mo na agad yung separation. Kanina magkapantay yung joint operation and joint venture under the full PFRS. But under the PFRS for SMEs, classified agad yan, yung joint venture, classified agad between yun yung higher umbrella, yung joint venture. At yung na-under niya is yung operation, jointly controlled operation, asset, and then equity. Yung discussion ng jointly controlled operation, jointly controlled asset, and jointly controlled entity are all included here. Yung operations, assets, and then entities. Under the entities, they account for it using any of the following, yung cost, equity, and fair value model. So you have to understand yung pagkakaiba nilang dalawa in comparison with the PFRS for yung full and then for SMEs. So choice of accounting policy on investments in joint venture. PAS 28 requires the use of the equity method in accounting for investment in joint venture, di ba? When we classify all it as already a joint venture, equity method siya under PAS 28. However, PAS 27 provides the following choices in separate financial statements: cost, equity, and fair value. Okay? Sa PFRS for SMEs, it provides the following choices for jointly controlled entities. So for jointly controlled entities, ito lang yung choice. Ito yung choice for entities only: cost, equity, and fair value model. Okay. So yung cost model, equity model, fair value model, by this time you should have a known or familiar with the differences between the three models. Okay? Pasadahan lang natin ng konti. The jointly controlled operations, as the term implies, it is more of a combination of the operations between the venturers. So, kung makikita mo, venturers ang tawag kasi nga, joint venture agad ang classification under PFRS for SMEs, tapos tsaka pa lang siya mahahati into 3. Okay? Yung joint operations na discussion under full PFRSS, essentially yun lang din yun. Ang pinagkaiba lang yung essentially yun lang din yung differences. Ang tingnan natin ngayon yung asset. A jointly controlled asset involves joint ownership over the assets contributed or acquired for the purpose of a joint venture and dedicated to the purpose of the joint venture rather than the establishment of a separate entity. Halimbawa, yung sample before, bumili ng yung pipeline acquisition, bumili ng pipeline para na pwedeng gamitin ng dalawang entity. That is a jointly controlled asset if the entities fall under the classification of an SME, 'di ba? May capitalization threshold 'yan at saka yung number of employees, 'di ba? May ganun 'yan. So kung magpo-fall siya doon, it will be classified as a jointly controlled asset under PFRS for SMEs. So ganun yung orientation natin diyan. A venturer naman under the jointly controlled entities involves establishment of a separate entity. So ito, kung kanina operation, kung kanina asset, ngayon naman meron ng separate entity, yung parang separate vehicle na tinatawag, in which each venturer has an interest. The separate entity operates in the same way as other entities except that a contractual arrangement between the venture establishes joint control over the economic activity. Kung dati sa full PFRS, di ba merong joint venture? A joint venture. Dito naman, parang yung joint venture na yon, parang ito yung jointly controlled entities. Diba? So you will account for it using the cost, equity, and fair value model. So investment is measured at cost, including transaction costs. Okay. Investments are under measure the equity method. So i-specify naman on the problem kung anong model ang gagamitin for the transactions because the standard allows the use of one of these. So it will depend on the analysis of the entity kung ano ang most applicable on the circumstances kasi may advantages and disadvantages on the use of the models. So i-identify ng management kung ano yung fit and proper to the entity na magme-measure ng reliable financial condition ng operations ng kanyang joint venture. So, it will depend on the management. So, ikaw, as accountant, pag sinabing cost model, you have to be familiar with the cost model. Pag sinabing fair value model, you are expected to have learned the application of the fair value model on the transactions of the entity under audit or under accounting. I think that is yes. That is the end of the discussion on accounting for joint arrangements. Thank you.